It was a way for banks and lenders, originators of loans, to get new money in their coffers in order to make new loans. It's one of the things I talk about quite often, not only in the book, but throughout my history, is that, the industry of home ownership, the relatively low interest rates that Americans see comparative to the rest of the world, and the ability to borrow at relatively high loan to value on real estate is all because of the secondary mortgage market. It all comes from this non-existent opaque market that banks and lenders and pension funds and insurance companies can go buy a big pool of mortgages, put 100 million or 500 million or $1 billion of cash to work on fixed rate mortgages or government backed mortgages or private mortgages, which might be at a higher yield. Well, the secondary mortgage market is where all that stuff is traded. Like I said, it's not necessarily like me going onto a website. As a matter of fact, many have and still have, Newmark and others, they have tried Real Insight. They try to have their own little online markets, and everyone's it's a free for all. It's who you know. And, there's been periods of time prior to the GFC of 2008, where the secondary mortgage market really became more open to guys like me, regular real estate guys who didn't come from a Ivy League or a Wall Street background, who knew real estate, but never thought of the idea of trading in loans as a way to get access to real estate.